So welcome back everybody. Let's go through now the cash flow statement of the company. Cash flow statement actually shows us the cash produced by the company throughout a year or throughout a period. And it has three parts: the operating cash flow, which can be derived from the changes in the accounts receivables, changes in the inventories, and changes in the accounts payables. The second part is the investment cash flow, which can be derived from the change in the real estate stock of the company and change in the machinery and the equipment of the company, plus depreciation of the company. Here it has to be added because it is actually part of net income. So once it was subtracted from the income part of the company, like from the net sales, and it has to be added back because it means no actual cash flow movement regarding the company's activity. And in the third section, we have a financial cash flow, which can be actually derived from adding up all the other parts of the cash flow statement that has not been already classified in the second one. And this is like, for example, the investment in state bonds or sale of stocks, change in short-term loans, change in short-term credits, and so on. And if you add up, we get 94. And if you want to see the total cash flow of the company, then we just simply add up the operating, the investment, and the financial cash flows. And what's this check here? This means that this 130 actually can be proved by the changes regarding the cash in the balance sheet. And you can see that there is a difference between them. The cash amount grew in the last year and the gross of 130, and it is the same if we add up these parts, the financial, investment, operating cash flow. So this is actually how you have to imagine a simplified cash flow statement of the company. Obviously, as I have said it many times, in real life it can be really long process even to compute it, and it can be even long process from the audit, so the external financial auditor side, to prove that this is the correct value. Before getting really deeply into details, I have to tell you that the operating and the investment cash flow together is the free cash flow of the company, so it's 36 in this case. And it can be said that 36 million US dollars were produced from the core operations of the company, from the daily operations. And the financial cash flow is not linked to it because it's not directly linked to the daily operation activity of the company. Obviously, if it were a bank, then it would be a different case, but now we are dealing here with an industrial producer company. Well, let's see now a little bit deeper how the actual figures were computed. So here in the first row, we just copied the net income. So basically, here you can see some cash movements, and the result were 28. And let's start now with the operating cash flows change in AR. You can see that here in the accounts receivable a little bit increase, which means that it was paid back by the client, and the change in inventories actually remained stable and a little bit got higher. This means that once the inventory level of the corporation increases, the money will decrease. And concerning the change in AP or accounts payable, you can see that it is a little bit higher, which means that it did not pay something. So, or money amount become higher. If you're adding up, you get 30. And let's go a little bit further now concerning the investment cash flow. Here we can see that real estate level or value of the company did not change, and only the machinery and the equipment part changed. It actually decreased a little bit with 3 million. And if we add up the D&A, then altogether, or the depreciation and amortization, we can get together a value of 6. Now, if we go a little bit further, then we can go to the last part, which is the financial cash flow. And let's see that we invest into state bonds, so we indebted ourselves. In our balance sheet, you can see the substantial growth. And here, therefore, it's a huge level of positive cash flow, We sold some stocks, which actually goes here. This means that we sold them. We got some money in return, so it grew. And regarding the loans, we can see that the short-term loans increase, so it's a positive value, it's a positive cash flow, and it's the same case with the change in the short-term credits. And altogether, if we add up, it's the difference is 5. So our cash flow level on the financial side increased. And regarding the return earning change, you see that there has been some reduction, and altogether it's 3 million. And the equity capital, as you can see here, did not change. We add up them, we get 94. And yes, here we can see that it's a huge positive value regarding the total cash flow statement of the company. So basically, financial cash flow activity company is substantial, and it's very positive, which means that the company indebts itself permanently.